local standpoint, make sure that you checking out the springpensacola.com. We have a resources page for COVID-19, and it's got some links. So as you hear us talk about different grants and EIDL, PPP, there's some information there if you aren't familiar with it. And that's really the main thing. So make sure you check that out at the springpensacola.com. And kind of the genesis, before we get going, I'm going to let Branden kind of take the floor kind of to start with. And obviously there's been a lot of content, and there's been, we had a webinar with Scott Remington of Clark Partington about the PPP and kind of walking through maybe the legislative side of this. But even since then, a couple things have happened. First of all, there's been a lot of changes. If anybody's applied for it, like I have personally, you've gotten about 1 million emails from your banker saying, oh, well, wait, now we need this. Wait, now we need this. So PPP and EIDL, but especially on the PPP side, it's ever evolving as of this moment. Probably Branden will tell you 2 days from now, the information might be different than it is that he'll be talking about today. So we understand that. And so even though this isn't a primary focus on just those things, we understand that is what is top of mind for pretty much every business owner out there, is making sure that that's completed and that's completed successfully. So certainly expecting a lot of questions about that. You can start firing away again, like Abby said, on the Q&A down there. We're going to touch on, and Branden's going to touch on some other topics that we'll get into, about cash flow and some other things like that as well. But again, we understand and can sympathize. I can personally sympathize with understanding how much concern and anxiety everybody has over specifically those things that can help save or boost your business. So again, as we go through this, feel free to fire out any questions that you have. And again, this was born from conversations I'm having with businesses in our community right now that are I've had probably 3 business owners in the last 24 hours call me with specific questions about not just PPP and EIDL, but also about specific accounting things. And I try to find them some answers. So we just hope that this would be we've had kind of an attorney perspective, both with Scott and also on Monday. And we just wanted to bring somebody on the accounting side to come answer some of those questions as well. So that's it for me. Thank you guys for being here. And I guess, as I said, Branden, if you want to kind of get this thing kick-started with kind of an overview of what's out there, what you guys have a lot of clients in this area, small businesses. What are you dealing with and handling the most when it comes to, I guess, EIDL, PPP, and those programs?
Well, everybody, it's a pleasure to be on here with you all today, and hope everybody's staying safe throughout these difficult times that we're currently traveling through. But just to hit on a high level standpoint, the 2 type of loans that we're mentioning is a PPP loan and an EIDL loan. Both of these are provided as a resource to make it through these challenging times via the federal government. The PPP loans are more or less loans that are made through private lenders. There is potential loan forgiveness related to these loans, which has caught a ton of publicity and is very attractive to a lot of small business owners. One of the great things about the PPP loan is that no collateral is required, and there is generally no personal guarantee attached to these notes. On the other hand, the EIDL, just to hit on a high level of that, these loans are applied for directly with the SBA versus a private lender. There is no loan forgiveness related to these loans, and collateral and personal guarantee are generally attached to these types of loans.
So Branden, I think one question out of the gate, I'll tell you probably the most popular thing that I've heard, at least when it comes to that, that the question is, I got it again on social media yesterday, was, what if I've applied for both of them? How does that impact me? I know there was some talk early on that if you had applied before March 31st, that you would be able to take advantage of both programs without one affecting the other. I don't even know if that's true anymore. That's kind of how I had to explain it, is things have changed so much, especially on the PPP side, that, I don't know about that. What do you know about the relationship of applying for both if you feel like you need to have both, and how one affects the other?
Yeah, so a lot of companies probably jumped out of the gate soon to apply for an EIDL loan before the PPP loans are made available. You can apply for both of them. Now, the challenge becomes not using these funds for the same purposes. We've advised people to create separate bank accounts for the money to go into. That way you can track what these loans were used for. Recent guidance has come out that says that if you have an EIDL loan, that you can even refinance that as a PPP loan and not have to navigate the challenges of two separate loans go in that direction.
Gotcha. Okay. Before we jump, we're starting to already get a few questions, which is great. Keep firing away, and we'll get to those shortly. But I wanted, knowing that the Q&A will probably, again, we'll end up covering a lot of details of EIDL and PPP. Before we jumped into that, I did want to talk about a couple of different things. One thing, and I personally haven't been great at, but I think you're starting to see a lot of questions about is cash flow, understanding cash flow, and maybe even more specifically, days cash on hand. You hear that term, Branden, all the time in traditional settings. How many days cash on hand do you have if something were to happen? Well, here we are, something's happened. So now, do you mind kind of talking about that, even from, kind of at an elementary level? What is cash on hand? Why is it important? What's a good way to track cash on hand, and why does that matter right now?
Absolutely. So at a time like this, cash is more important than anything. As we've heard time and time again, cash is king. Now is the opportunity to really put that saying to true meaning. Really, the challenge here is to sit down, back of a napkin or however you want to do it, is to identify what cash that you have available in your bank account, and then to compare that real elementary style to what expenses you have going out the door. Obviously, some of those expenses can be, kind of minimized as businesses have slowed their operations. But really, it's just to get an idea so the business owners can make a better decision as they move forward, how long they can sustain their operations with the amount of cash that's available, as well as the amount of expenses that are still being incurred.
And I'll give, I guess, an example from the brewery side. It would be short-sighted for me to go look at my last 12 months of top-line expenses and say, well, I'm making this number up. It's $50,000 a month to operate. Obviously, if we're not selling as much beer, or we don't have as many people working as many hours, obviously those expenses are going to go down, correct? So it's not just saying, punching into QuickBooks, what's my last 12 months? What are some of the things that you're seeing that wouldn't be included, both in the fact that you're just not selling the same amount of food or beer or retail items that you normally were, which means you aren't taking on some of those expenses. But also, Branden, for the companies that you've been working with closely in these last few days, what are some of the tactics that you're seeing people use or utilize to lower expenses, or at least get some of that mitigated, pushed back, deferred? What have you seen people doing that perhaps could be useful to somebody out there that's worried about that next bill coming in?
Absolutely. I think two things to really keep in mind here is obviously discipline and to know your numbers. Discipline, the forefront of that being, don't make any rash decisions. Know what type of inventory that you have. If you're that type of business that keeps inventory on hand, understand your payroll burdens. Understand that your talent is strong, and understand the best ways that you can maximize how you use that talent that you have on board. And going back to the know your numbers, obviously we've all seen P&Ls and balance sheets, but it's very important to understand what those numbers mean. And sit down with a current balance sheet and P&L if you can, just like DC said a moment ago. Looking back at 2019 numbers, yeah, they're going to be helpful to some degree, but obviously the operations that we're facing now have changed drastically since then. So really just look at those numbers, but if you can sit down with a current balance sheet and P&L, understand those numbers and be able to communicate clearly to your employees and to your other business owners what you can do to make it through these challenging times, and to really keep an eye on what's going on.
Okay. Another question that when I've been talking with folks, I'd said we were going to do this that had come up was about key metrics. And of course, there's the obvious ones. There's cash. You just talked about it. Pretty easy to understand that you need to be keeping a close eye on that. As you're working with companies through this right now, or if you were a CEO or an entrepreneur that owned your own business, Branden, and with the knowledge and expertise you have on the accounting side, what numbers, what metrics, especially maybe take somebody like me who we're not closed completely. We have a revenue stream. It's certainly not the same. What are the key metrics, 2 or 3 metrics maybe that you'd be keeping an eye on for a small business owner out there, outside again of the blatantly obvious? You want to know how much cash you have in the bank, you want to know how much revenue is coming in, but what things would you be watching every day, every week as we move forward?
I think a really important metric is called working capital. We've probably all heard of that to some degree, but more or less it's your current assets minus your current liabilities. And that allows you to see what assets you have available that are either cash or can be converted to cash quickly, as well as what liabilities that you have to pay, whether it be next month, the next 6 months, or down the road, maybe 9 to 12 months down the road. So just be sure that you have sufficient working capital. A target that we like to hit with all of our clients is 12 to 24 months. Again, know your numbers, know what your cash conversion cycle is. Some questions that we typically ask some of our clients is, what if they lose a key customer or vendor? What if they lose a key employee during a time like this? And how does that impact your cash flow needs? So those are questions that are challenging on a normal basis, even more so with the situation that we're in right now.
Gotcha. Okay. Last thing, and I'll save for the end, because again, we've already got questions coming in, and I know I want to save a decent chunk of time to probably dig into some specifics on the execution of PPP and those things that I know we'll discuss. But at the end, if we have some time, I do want to talk about what's not really being talked about much is some of the tax implications when it becomes time for a tax return. Obviously, those aren't as top of mind as some of these programs are today, because we now have a few months to worry about that. But I want to make sure we'll leave some time to cover that. Or if you're listening out there and have any specific tax return questions and new consequences or impacts of some of this legislation on that, we'll try to save a little time for that as well. But last thing before we get into your questions, Branden, what are the 2 or 3, if it's PPP and EIDL, we can get into that shortly, but maybe outside of that right now, what are the 2 or 3 biggest questions that you're getting, concerns that you're getting when the phone rings? What are you expecting to be talking about other than probably PPP or EIDL right now?
Really it's about containing. That's the big one. Individuals wanting to know unique ideas and unique ways on how they can contain their cost. Generally, businesses operate, you've got money coming in the door. Hopefully that's more than money going out the door. During times like this, a lot of us are facing the situation of we've got more money going out the door than we do coming in the door. So the biggest question that we get is, again, just how do we contain our cost? We try to explain the difference between variable and fixed costs. We try to help our clients understand the supply chain economics, and then trying to explain to them what it means to be cash flow positive versus cash flow negative, and calculating how long they can sustain their operations given the times that we're in if nothing was to change. That's the first question we get. The second one that we tend to get is related to human capital, employees. This is, it's forefront. We've all got employees that are great. We've got employees that we want to keep on board indefinitely. However, sometimes, the situation that we're in now does not allow for the cash flow to do so. So the unique question that we face is, how can I keep those employees on board as we move through this difficult time? And, that's just a hard thing, because obviously a lot of these employees that we have, either they have families or have obligations outside of work financially to address as well. So cost containment and human capital being the 2 main things that we're facing.
Gotcha. Okay. Great. Well, we'll start getting, we've got eight questions in so far. We'll start running through these. So we'll start with Woodfin Kavasa. How do we handle keeping our employees financially supported during the transition from reducing hours over the last 2 weeks and then qualifying and receiving UC? I'm assuming that's unemployment. Just don't want to jeopardize their application, but they deserve some pay and we want to handle it correctly. Before Branden addresses that, I will say, if you go on our Spring Pensacola page, we had a webinar with Amy Remington specifically on some of the HR consequences of reducing hours and all that. So that's not exactly to your question, but it was really valuable. I was glad I was able to chat with her about that and talk about some of the things that you can or cannot do when it comes to, and I'm not suggesting you can't do what you've asked here, but that would also be a great resource for you, and it's on our social media as well. But back to that question, Branden, to kind of translate that a little bit or make it a little more concise, it sounds like somebody's considering reducing some hours for staff, but there is unemployment compensation available to people who aren't just laid off. Is that correct? They can, if there's a consistent showing of a reduction in hours. So, he or she doesn't want to mess up this application or somebody's opportunity to receive unemployment, but they also don't want to just leave them out in a lurch with nothing right now. What would be your advice based on from an accounting standpoint?
Yeah, so the unemployment benefits that we're presented with now are completely different than unemployments that we've been presented with in the past. As DC mentioned, a lot of these benefits, they're flexible based on hours. Used to, in the past, you had to be, let go of 100% to get unemployment benefits. Now these are available if you've had reduced hours. The federal government even says that they will provide employees with $600 a week of federal benefit up to 4 months. State benefits have been extended through this package an additional 13 weeks, so a total of 39 weeks. So the unemployment it's generous, yes. However, these are challenging times that we're faced with. Now, if you choose not to go the unemployment route, if you want to keep your employees on board and continue to pay them as you can, the federal government has put out a few tax credits out that are very beneficial. One of them is known as the Families First Coronavirus Response Act. That relates to sick leave and extended family medical leave. So that is a 100% tax credit. So for example, if you have employees that are out because they've been affected by the coronavirus, where they've had a loved one that's affected by the coronavirus, you can continue to pay them, and the federal government will more or less provide a 100% credit, pretty much pay that payroll to you, those employees. Another one is called the Employee Retention Credit. This is a tax credit for 50% of wages paid by employers to employees. This credit is available to employees whose operations are fully or partially suspended, or their gross receipts have declined by more than 50%. So the federal government has gone two ways with this. They say, hey, if you want to put your employees on unemployment, we'll take care of that. But yet, if you want to keep morale high and really continue to take care of these employees, there are some tax credits out there to assist with that as well.
Gotcha. And on that payroll tax credit, correct me if I'm wrong, if I may have this incorrect. On the 50% credit, as it relates to PPP, is that a one or the other situation?
That is exactly right. So that's one thing you've got to be careful with. I'm glad you mentioned that. You've got to sit down and really put pencil to paper in this situation and analyze, is the PPP route more effective given your circumstances, or is the employee retention payroll credit more effective given your circumstances? Just as you mentioned, it's one or the other. Don't just assume that the PPP is always going to be the positive, more beneficial route. Yes, it may be, but also keep in mind that there could be other variables in play that really need to be considered throughout this process as well.
Got it. As a quick follow-up to that, and then we'll move to the next question. Again, I always relate things to kind of my example. So So when you say they're adding 600 a week, that's on top of the 275 a week in the state of Florida. Is that correct?
That's exactly right.
So
you'll probably have probably have a few employees that may have an opportunity to make more being unemployed, which is, kind of strange to some of us, but they've got that opportunity as well to try to make it through these challenging times.
And it's almost an inverse of our first question, which, this person said, hey, look, we want to support our staff as best we can, don't want to affect their ability to get unemployment. What I've analyzed is kind of the other way. I have staff on now that may, tips are down, because we're doing half the sales normally. Maybe they're making 500 a week. Am I holding them back, in some way? And so it's an interesting dichotomy as a small business owner, because on one hand, we have a federal program that is promoting the idea of retaining your staff, understandably, right? I mean, the PPP, that's exactly what that is. They're saying, hey, look, keep as many people on as you can. But when you also fund, unemployment to that degree, then it becomes, am I doing my staff a disservice by saying, hey, stay on and make $400 when, you can go take unemployment for $875? And honestly, Branden, I think the only thing that's really making employees hesitant of that is there's so much unknown around unemployment right now because of this sheer volume, like that just applying for it. It's not like it comes the next day. So I think people would already be concerned of like, well, I'd rather just one in the hand, not two in the bush, and say, let me go make more money in unemployment, because it just feels like there's so many unknowns about when it would begin, when would your application even get processed, and those kinds of things.
Yeah, that's exactly right. A lot of our clients, they've experienced 2 to 3 week wait times to receive unemployment. And even then, there are people every day, you see it on the news, that are having challenges getting unemployment because the volume is so great that the technology systems that were originally put in place can't handle what's going on right now. So, that is one thing to keep in mind. Another thing is, as small business owners, as you weigh this decision, unemployment versus keep my employees, there are many intangibles to keeping your employees if you can do so. Obviously, it's a morale boost. Unemployment's going to end one day, so you can kind of have that conversation with them as well. We hope to get back to normal, operations sooner rather than later. But again, nobody knows. So it's just the big picture. You've got to step back and look at the intangibles versus the dollars that are presented in these opportunities as well.
Great. All right. Thanks for that. All right. Our next question from Jason Parker. I think I heard in Monday's discussion that PPP funds can be used to pay accrued vacation hours and have it be forgiven. Did I hear that correctly?
Yes. So PPP, you can use that to pay for salaries, wages, commissions, or similar compensation. So again, vacation, parental leave, family leave, medical and sick leave, whatever it may be, those type of benefits would then be included in that payroll cost where you can have that forgiven as well.
Got it. Okay. All right, Tap the Coast asked, my business is very new and I haven't a paycheck yet as a sole proprietor. Could I still qualify for PPP? So in this particular scenario, take someone who has just, started a business and recently and is the sole employee of their business. They're obviously not going to have 12 months of income to apply for PPP. Are they even eligible? And if so, is it worth that perhaps over something else that would be out there?
Yeah, it is. It's eligible. Again, not having any metrics to really base the loan proceeds or the loan request off of makes it a little challenging. Businesses that were not in existence in 2019, they're taking the payroll calculation January and February. That's kind of where they drew the mark, and they're going that direction. So if there's not any payroll, the opportunity is still there through other avenues to receive such a loan. However, the calculations and the proceeds tend to be a lot less, obviously, since this was designed to cover payroll more than anything.
So say I started my business and, typically a single owner, sole proprietor, they're not going to probably usually designate themselves a salary in a lot of cases. It would just be whatever comes to the bottom line at the end of the year or whatever, maybe a little distribution or something like that. What if they haven't designated a specific salary? What if it's just, hey, I started this business and I'm going to see how profitable it is? Would that negatively affect them if they have not set a number like that by February 15th?
I don't think it will. A lot of people, sole proprietors being one of them, just as you mentioned, don't quote unquote draw a salary. So again, a lot of banks are doing things a little differently based on what lender you're using. But a lot of them will look at distributions. They'll look at net income in a case like this, and they'll really try to compute a number that seems reasonable based on the activities that's gone on through the past few months.
Got it. Okay. All right. A follow up to that. Can you apply for the state's emergency bridge loan as well as the EIDL and or PPP? Are those the same funds? I'll say from personal experience, I've applied for and was approved for the emergency bridge loan, and I'm applying for the PPP. So I do know for certain that the state bridge loan is completely independent from any impact on the EIDL and PPP. But obviously, as we said, there are some crossover impacts on on number 2 and number 3. Is that correct?
That is correct. The Florida bridge loan, that's a great benefit that we have here in Florida. Not a lot of states have that opportunity and that amount of funds to pass along to small business owners. So certainly go out, apply for that if you have not done so already. And that can be used, or the funds, can be received in coordination with the EIDL or a PPP. So just really, try to get as much help as you can. I would heavily encourage that. Use the resources that are available to you. And at the end of the day, try to do as much as you can and try to obtain as many of those resources as you can.
Okay. Quick follow-up on the previous one about sole proprietor. Is it true that it's based off net income, or is it other metrics? And then I believe this is accurate. The application for sole proprietors actually opens on Friday. So even though you've seen a lot of news, other small businesses have already been applying since last Friday. I know that at last check for me, that is accurate. April 10th was going to be the day that sole proprietors could apply.
Yes, that is exactly right. And just kind of keep in mind as well that, obviously that is the day that businesses, sole proprietors can apply. The banks have gone through challenges to get those resources out there. So keep that in mind as you kind of calculate your cash flow and go through that process as well. But yeah, April the 10th, it's supposed to open up, and you should, be good to start that process at that point.
I will say with my experience working with Branden and his group, I think the best thing you can do, most banks, especially now, I think if you're a sole proprietor, now that they've even gone through the first leg of this, I work with Hancock. They did a pretty good job of kind of laying out, hey, here are the 10 things we think we're going to need. And I bet they'll know even better now than they did when they sent me that email initially. But because we certainly had to fill out plenty of extra forms that were unexpected. But my biggest recommendation to friends of mine that are entrepreneurs is have all of that stuff ready. Warren Averett did a great job with us, and they turned it around quick. And I think at least through our loan officer, we were the first ones on PPP to get in and get it. I think I even heard today we may have been approved. So, and that was all because we had our ducks in a row for sure. It's not that we deserved it more or had less money or more money. That was solely driven by us having our documentation in hand as quickly as possible. So, and as sufficiently as possible. So that's been my number one piece of advice when everybody's asked me about applying for PPP. So make sure you're doing that. Okay. Next question for Branden. It looks like I'm going to try to translate this. How do you apply for a PPP loan? It says if your personal is not participating or accepting applications. I'm guessing that means your personal bank, because if you have not applied out there, the PPP program is an SBA product where you have to apply through a bank. The EIDL you can actually apply for personally, even though it's also an SBA product. But you work through your bank, whether it doesn't mean you have to have a loan, doesn't mean you have to have debt service, just mean, whoever your checking accounts with, whoever that you do business with as as your own small business is who you're going to have to use. So I think we're just missing a word there, but I think that was the question is, what if your bank isn't participating or accepting applications?
I think that the best thing to do is if you go to whether it be our website, warrenaverett.com, we've got a resource page that'll take you to providers that are offering these types of loans, or maybe speak with banks in your local area. A slew of banks are offering these loans. There are some out there that are not. But one thing to keep in mind is that it is a first come, first served basis. A lot of the banks are taking the mindset of, we're going to address our current customers first. So if you can get out there quicker, sooner than later, and just try to find a bank that you can really work with through this process and work with quickly through this process, because the funds are, they're going out the door quickly. I think I read an article this morning that said about 20% of the funds have been allocated already. So just keep in mind that, this stuff is happening very quick, as many businesses need the funds quicker, sooner.
Exactly. Yeah. So yeah, be as prepared certainly as you can. All right. Is there any knowledge if the funds have been successfully delivered within the 3-day time frame for EIDL? What has been a consistent way the government has communicated each individual applicant's updates, i.e. email, letter, or phone?
So the email method tends to be the most, I guess, widely used method for the federal government. They have been not as timely as they had wished to getting the funds out the door. There have been many challenges, many changes. As DC mentioned earlier, this stuff has been changing every day. So they're just trying to keep up with the changes as best as possible. So the 3-day rule, it has applied in some cases, but there are many that, have become frustrated as they continue to wait for this process.
All right, another question from Jason. With respect to maximizing cash, should we pay minimum payments necessary to service debt, i.e. business credit card? And is it true that the interest portion that can be forgiven is the part that can be forgiven from the PPP, or is the interest forgiven only related to mortgage interest?
So the mortgage interest, that's going to be the piece that's going to be forgiven. You've got mortgage interest if you're renting, on the other side of the coin, that full rent payment will be included within that forgiveness as well.
Okay, so to be clear, in other words, if I have a loan for a liquor license, the interest on the liquor license loan will not be forgiven. It's only if it's tied to the property?
Yes.
Okay. I'll also, most people who have an SBA 504 loan, I know we do. If there is anybody out there that's, of course, a 504 loan is typically tied to a piece of property as opposed to a 7A product, which is in essence what is being used here, not in essence, literally what is being used here for PPP. We had gotten a note that 504, the loans, the SBA portion of your loan for a 504 is actually going to be paid both principal and interest for 6 months as part of this program. So that's a big help to anybody with a 504 loan. Again, if you have one, chances are somebody's reached out to you to tell you that. But if you know of anybody, make sure they understand that. And that's, again, quite a benefit to that. That's not just interest, and it's not a tax credit or anything. It is like you just won't pay on that for the next 6 months. So, all right, let's move to Sabrina Simpson asks us, are you able to qualify for tax credit and loan forgiveness under PPP? It sounds like you're not. Is that correct?
So the employee retention credit, if that's what she's mentioning, you cannot have that used in coordination with a PPP. However, there is an opportunity to defer your payroll tax. That's another option to pretty much, free up some cash flow. You can defer your employer portion, Social Security, of your payroll tax until you receive loan forgiveness for the PPP loan. So that may be 8 weeks, that may be 10 weeks, but again, that is an opportunity where you can kind of defer your payroll tax way down the road, which will free up a pretty significant sum depending on what kind of employees you've got on your payroll.
All right, great. All right, Brandon, another follow-up with Sabrina. How long is it taking for employees to receive unemployment? Now, obviously, this is a moving target question. Maybe how long is it supposed to, and what are you hearing maybe through business? You've got a large sample size at Warren Averett. How long is it taking for people, what you're hearing, to actually receive unemployment? I'll say one very small example for ourselves is, we mentioned this, that perhaps it would be a good idea to file for it. We have not laid anybody off at our brewery, but to at least start getting some steps done. And my understanding as of a couple of weeks ago is some people that had done that have not heard anything back yet. And it's been at least, we're going on a third week. So I don't know what everybody else's experience, and Branden will have probably more of a sample size than I do.
Yeah, one of the challenges that we've seen is a lot of our clients they're on about 3 or 4 weeks now as they go through the unemployment process. In an ideal world, supposed to take, maybe less than a week. But again, the volume that's going through this process it's just unreal. It's millions a week that are going through this process. So yeah, it's about a 3-week turnaround, maybe a 4-week in some extreme cases from what we've seen.
With that, to receive the federal portion that you mentioned earlier, the $600 a week that's coming on top of what the state portion is, will that automatically be received by anybody in Florida, or is there 2 different applications, 2 different checks, 2 different direct deposits?
So from what I understand, they should be communicating to each other, the federal government, state government. That should be, once you apply for the state benefits, it should automatically kick in that federal benefit as well. So they're trying to make that as streamlined as possible. That's their goal at least. If they get to that point, wonderful. Again, this stuff is just a moving target. It's ever evolving pretty much on an hourly basis.
Okay. And then when it comes to FMLA, are those people still paid through payroll or through insurance? And it seems like if there's going to be a tax credit, it would be people remaining on the payroll. They would just be identified as such. Is that how you guys are accounting it?
Yes, that's exactly right. So a lot of payroll softwares, primarily the ones that we use, they have separate allocations for the employees that are on that FMLA. So yes, in order to receive the tax credits, those employees are to be put on FMLA, and their wages are to continue to be paid by the employer.
All right. All right, we got a question from Brian. Many of the programs are for companies that have been in existence for several years. Do any programs exist for newly started companies? We did touch on specifically on PPP, but Branden, is there anything out there, whether it's the bridge loan, is there any, maybe take those 3, EIDL, bridge, and PPP. If you're a newly formed company, what's available out there for you, or what's specifically not available out there for you right now?
Yeah, I think in this case, February 15th is the common date that's used. As long as your business was in operation by February 15th, pretty much all of these funds are available to you, assuming you were in operation by February 15th.
All right. We've got a question about the Families First tax credit. How long should we expect it to take to recoup the Families First tax credit? Wouldn't it take 10 or 11 payroll cycles?
Well, the good thing about the Families First payroll tax credit is that the federal government has allowed for immediate benefit to be received. And what that means is you can pretty much withhold the payroll tax that are associated with those payments. You do not pay those to the federal government. So you're receiving benefit essentially immediately as a result of that. You then, when you do your quarterly payroll tax return, you then reconcile the differences. If you have some excess that you need to receive from the federal government, there's an additional form to fill out, and that process has been pretty quick as well from what we've seen. So it is an immediate benefit. It's a little cumbersome, a little challenging to kind of get the software to do what you need it to, but those credits are available right out the gate. And they started, I believe, April the 1st. So they've been available for about a week now.
All right. Great. Jackie asks, with PPP, must the payroll be with the same employees, or can there be new hires? My understanding is that is not, it's a 75%. It can be measured a couple different ways. We have a question about that next. So we can talk about the 75% and how we define that. But I guess you can't really punish a business if Branden is a bartender for me and decides to leave for another opportunity. It's about filling that role and filling that job, correct? It doesn't have to be those people, those 75% of the same people.
Right. So yeah, same people do not have to exist. Just as DC mentioned, there is a calculation that must be computed that if you let an employee go, more or less, you bring on another employee, or if that employee leaves, you bring on another employee. So the head count's going to be the key. It doesn't matter what mix or how that head count's made up, just as long as you can maintain in total what that looks like.
All right. And as a follow to that, Patrick asked, can you talk about the provisions in the PPP where payroll costs incurred are less than 75% of eligible costs and impact on grant benefits? So let me add a little part to that question as well, Branden, for you to answer. So it sounds like the question is the ratio. How does the ratio start to, if you're keeping less than 75% of those payroll costs on, which is the metric for full forgiveness, then how does that, when you're under that, what does that look like? And then also, I think as to dovetail on that, how are they defining 75%? Is it if I had 16 employees, I need to have 12, or are they going to measure it based on hours? Because that's been a big question, especially in the bar and restaurant industry, where I may keep everybody on technically, but if they've gone from 40 hours to 5 hours, then perhaps it's not 75%. So I guess, how do you define the 75? And then to Pat's question, if the your payroll costs are less than 75% of eligible, yeah, I'm sorry. He's saying if payroll costs are incurred are less than 75% of eligible costs and impact on grant benefits. So kind of two-part question.
Yeah, that unfortunately is an area that they have not fully navigated yet. And the reason I say that is you can imagine their primary concern is getting this money out the door and into the business owner's hands. But as we know now, 75% of the loan proceeds must be used for payroll costs in order to receive forgiveness. What they're going to do down the road, if you have less than 75%, is to be determined. But we'll certainly keep an eye out on that and try to keep everybody informed as much as we can.
Right. And yeah, not to confuse that point, right. They're talking about that 75% of the loan proceeds. That's one part, but the litmus test for getting full forgiveness is also keeping 75% of your employees. Is that correct?
That is correct.
And then if it's measured by job, measured by hourly, how are you expecting that that's going to be measured?
Yeah, they do it. From what we've seen, that they're referring to it as a full-time equivalent. What that is it's a computation that you go through, and it's pretty much an employee count divided by how many hours they're working. And when you come up to a number, that number is then what they're basing. Hey, you either maintained your employees as a whole, or you ended up dropping more employees than what you need in order to receive that forgiveness.
Okay. We have a question as another sole proprietor question. As a sole proprietor, how do you have proof of payroll for yourself for the loan? How do you prove what you're making for that loan?
I think going back to kind of what we mentioned earlier, a lot of banks, they're using the metrics of either distributions or net income. So those are going to be the two primary drivers that they're looking at. Banks are going to do things a little differently depending on where you're going. But at the end of the day, distributions or net income tends to be what it boils down to.
Question about banks have seemed to close portals. It sounds like I haven't experienced that yet, but sounds like maybe they were open Friday, and most of the banking institutions in Pensacola closed on Monday, April 6th. What do you know? Have you heard anything? I haven't. Doesn't mean it isn't happening. I just mean I haven't heard that. Have you guys experienced that, or had any businesses having issues getting through with a bank with PPP?
We have not. Again, not to say it's not happening, but we have not heard of that. I would certainly recommend contacting your banker and speaking with them one-on-one to kind of see what the holdup is or what the situation is. It may be they're either receiving a great volume of applicants and can't quite process them as quickly as they would prefer, or they're having a challenging time keeping up with the changes that they're facing as well. So definitely reach out to your banker, see if they can get that cleaned up for you.
All right, let's kind of stick on the topic of independent contractors, sole proprietors. Kathleen asks, can independent contractors obtain unemployment even if they can still work a percentage of the time?
Yes, we've got several cases where we've experienced this. Going back to the old days of unemployment, independent contractors were not provided with such benefits. However, with what we're going through now, benefits are available to independent contractors, self-employed, and what they refer to as gig workers. So if you've got reduced hours, reduced payment, reduced income, whatever it may be, those unemployment benefits are made available.
Great. And that makes some sense. I mean, if I'm a DJ or I'm I'm in the wedding, but florist in the wedding business, I mean, if you're paid that way and now that's all gone, yeah, that certainly does make some sense, at least in LA, as I imagine. I'm a sole proprietor and I've not had any checks where I wrote out to myself as a payment for working. I guess kind of along the same lines. How do I prove that I'm my own employee?
Yeah, I think going to the net income metric, that's going to be the metric that's going to be used. Proving that you are your own employee. Obviously, if you're a sole proprietor, you automatically fit into that category right away.
Okay. All right. If you do not have a brick and mortar location, are you able to claim your mortgage or rent for a home office?
That I have not seen any guidance on. I would assume just from an early standpoint that, that could be in the mix based on how many people are doing home office, work. But as of now, I have not yet seen anything related to that.
And if we hear anything, we'll follow up and we'll post that on our page if we start to get some clarity on that. All right. David asks, for businesses with small payroll burden, is there a scenario where the $10,000 EIDL grant makes more sense than PPP?
I think that both of those are going to be available to you. The $10,000 grant obviously does not have to be paid back right off the gate. If you can feel comfortable with your payroll costs staying under that, and that's enough to get you through these challenging times, certainly. The PPP loan, the process it's very quick for the most part. It was designed to be quick. So those funds are out there as well. I think that either way, it goes back to individual situations and what kind of cost you've got involved.
And I would say, and I could have this wrong, I've heard through someone else, again, correct me, Branden, that grant, the $10,000, I don't think that if you have one employee, for example, you can get isn't it $1,000 per employee or something? To get to the 10,000, you'd have to have, I've read somewhere that you'd have to have 10 employees to get to the 10,000. That could be wrong. But if that were the case, obviously it might be pretty difficult to also keep your payroll under that amount.
Yeah, we've heard that as well. The challenge with that EIDL is just like you said, you've got to have X amount of employees. And if your payroll goes over it, then you're in a situation of, oh, I need some more funds. I need them quickly. Now I've got to go through this process again. And it's just, we've seen businesses, I'm not going to say which way is better, one way or the other, but we've seen the majority of our clients go the PPP route.
Got it. Okay. So should we pay the family's first time off now? I think this was a follow-up on the question about paid vacation. So we should pay the family's first time off now before we start using the PPP funds? And this person said, I have applied, but not yet been funded.
Yeah, I think that is an opportunity. Once you receive funding, keep in mind you'll have to stop the families first immediately. That opportunity is there. Just be very careful because that is what they're keeping an eye on is double dipping. They're trying to avoid as much as
I think your mic was cutting out just a little bit, Branden, to check on that. The Holly asks, if you had to guess, would you say the EIDL underwriting will be based on business net income / creditworthiness, or more of a handout as companies are able to show need or loss?
I think the EIDL it's going to be attached to collateral, personal guarantees. So there are some requirements that must be met to receive that loan. So I wouldn't say that the personal, I guess, need for such funds would be their criteria. With that being said, it's going to be a little more challenging to receive those funds versus a PPP.
All right. So let's get to our next question. Thank you guys for all these questions. We're up to 32 now, so that's we'll get as knock out as many of these as we can. How does Jessica asks, how does bankruptcy affect a business owner qualifying for any of these loans, active Chapter 13 and making payments?
That is a good question. Have not addressed that or have not seen that on our end yet. But again, as we receive information, we'll pass that along to you guys.
Great. Any follow up on those? As I said, we'll post on our page as well. And of course, you can always email us at info@thespringpensacola.com. And that's what we do. We're here to connect you with answers like that. So certainly follow up with us, and we'll do the same with any questions like that we don't have an answer to. We'll go find those answers for you. Will you explain the 8-week caveat for PPP and loan forgiveness? And is that period of time from dispersal date or application date? Branden, I would think it's got to be from dispersal date because there's no telling what the application date would be. But to Sabrina's question and to her point, if anybody out there, the 8-week caveat she's discussing is that you have 8 weeks to allocate that money for it to be forgiven. However, it's interesting because obviously they calculated 10 weeks, in essence, 2.5 months of your expenses. So if you don't have mortgage interest, if you don't pay health insurance, if you don't have some of those things, hypothetically, there could be a challenge of fulfilling or forgiving all of that because you only have 8 weeks to forgive 10 to 11 weeks of your maximum loan. Does that sound right?
That is right. So the loan forgiveness is 8 weeks from the date in which you receive the funds. Once you receive those funds, you're obviously spending it on eligible expenses, just like DC mentioned, whether it be mortgage interest, payroll, utilities, rent. Once you hit that 8 weeks, from what we're seeing is that borrowers will require certain documentation, certain evidence on what those proceeds were used on. And again, it's from 8 weeks from the date in which you receive the funds.
And I think that Branden's answer there is, I reiterate the point. I've already sent an email to our banker at Hancock to say it is going to be miles easier if this money, when this PPP comes in, it goes into a completely separate account. I mean, to be able to mix those and, again, what if I were to go, buy a truck tomorrow with cash that I have on hand, but then also the money's in there? It just gets confusing. It would just be a lot easier, it feels like, to deduct your payroll out of that separate account, deduct those qualifying expenses Branden mentioned out of that account. I think it would just be easier on yourself. So anyway, Abby, are we jumping in?
Yes, I'm booting you guys.
Okay.
Really appreciate you taking the time. We were able to roll through so many questions. So thank you to both of you for knocking all of those out. Thank you to everyone who participated for the lively discussion and fielding those questions for us. I apologize that we weren't able to get to everyone's, but I want to be respectful of everyone's time. We have recorded this webinar and we'll be emailing it out and posting it to our websites shortly after this. So if you missed any of the questions, you'll have a chance to go back. We're also going to export all of the questions and grab any that we were unable to get to during this time and share those answers via email as well. So if we didn't get to your question, fear not, we will still find you some answers.
Great. I was going to say, we will do that as well. We'll post as at the Spring Pensacola and through Abby's channels. If you have a question out there that has not been answered, we will get it answered for you. Great.
Yep. So just to preview our next webinar, we are super fortunate to have Quint Studer joining us on Friday, who many of you may know or be familiar with. He's going to review how businesses can use this downtime to sharpen their saw. It has been a really popular topic. We might even have a couple other markets that we're doing these emergency response programs in join us for that discussion. So we hope to see all of you back here on Friday. I think Quint is also listening in to today's session. So thanks for joining us today, Quint, and we're looking forward to it. A reminder, if you have not done this already, please sign up for a one-on-one consultation with our team. This is not something to be shy or afraid of. It's a super friendly, casual conversation. I've really enjoyed all of the discussions that I've had with all of you so far. Really, what we're just wanting to do is learn a little bit more about what you're working on and what you're struggling with, and talk through any one-on-one questions that you have, and just make sure that you're getting set up with all of the right resources right now. So if you haven't signed up, feel free to peek back at some of the emails that I've sent you. I'll also include the link to join in our email follow-up from today's session as well. And a big thank you. Thanks for joining. As a reminder, we'll have all of this stuff posted up, and we hope to see you all back here on Friday. Have a great rest of your day. Good luck. Stay safe and healthy. Bye, everyone.